Welcome to the sectoral deep dive into auto components industry by Brickwork Ratings. Due to recovery in automobile sales, BWR expects the auto component industry to witness a 15 to 17% revenue growth revival in FY22 and 10 to 12% in FY23. Limited impact of the Omicron variant propelling double-digit growth in FY23. Though demand is expected to increase, lockdowns may impose disruptions in the supply chain from the sector. Domestic auto components revenue to increase by 16 to 18% in FY22 and 11 to 13% in FY23, backed by pent-up demand from the automobile industry and a low base. As more people postpone buying new vehicles in the present scenario, repairs on the current and second-hand vehicles will provide a window of opportunity for the automotive aftermarket. While the Indian domestic market is gaining pace in FY22 amid Omicron uncertainty, BWR expects export markets to grow by 20 to 22% mainly on account of a low base. In the long term, we expect growth to increase as the new investment under the PLI scheme. This will allow the industry to explore new markets by taking advantage of the prevailing anti-China sentiments and given the fact that India is the second largest steel producer globally. These are the export destinations of the auto industry. OEMs are facing challenges to bridge the demand-supply gap, government actions to help in the long run. In FY22 and 23, demand for auto components is likely to increase on the back of an expected rise in demand for automobiles after degrowth in the last 2 years. However, the lockdowns imposed during the first and second waves of the pandemic caused huge disruptions for supply chains as manufacturing units had to stop the production process. The Auto PLI scheme with an outlay of 57,042 crore is expected to boost the domestic manufacturing of auto and auto components. Recently, around 115 global and domestic companies have applied for availing benefits under the Auto PLI scheme. To read more about the auto component sector, visit the research tab on our website. Thanks for watching. Subscribe for more such content.